Well, welcome everybody. We are very excited about tonight. We are here for the Audit, Tax, and Accounting for Cannabis panel being brought to you by Cannabis LAB. We have an exciting announcement for you guys all. We now have a YouTube channel and we would love for you all to subscribe. You can find a lot of content from Elevate Your Grind, which is our weekly podcast, as well as a lot of our old content from previous annual conferences that we've had. So you can find our YouTube channel at Elevate Your Grind by Cannabis LAB. I want to give a huge thank you to Daszkal Bolton for this program. They are our sponsor host for the evening. My name is Amanda Barton. I am one of the co-presidents of Cannabis LAB Association. Our moderator tonight is Elizabeth Figueroa. She's a senior tax professional at Daszkal Bolton, and you are in very good hands. So I hand it off to you, Elizabeth.
Thank you so much, everyone. As Amanda said, my name is Elizabeth. I'm from Daszkal Bolton. I am based out of our Sunrise office. I'm so excited to be on moderating this panel tonight. I have some amazing panelists. I want to take a brief moment to allow them to introduce themselves individually, starting with Rachel Gillette, our cannabis chair from Greenspoon, Marder. Rachel, would you like to start?
Sure, hi. As Elizabeth said, I'm Rachel Gillette. I'm the chair of the cannabis practice at Greenspoon, Marder. A lot of the work that I do involves representation of cannabis businesses in tax matters, including tax court litigation. I have represented cannabis businesses in audits since 2010. So I have represented dozens of cannabis businesses. So I do see a lot of trends in the industry. So that should tell you a little bit about myself.
Thank you, Rachel. Next, I want, I'm going to butcher your last name. Is it Afaneh?
Afaneh, yeah.
Yes.
Hi, guys.
BioTrackTHC. So thank you so much, Mo, for being here tonight.
You're very welcome. My name is Mo Afaneh. I'm the Chief Operating Officer of Helix BioTrack, and I've been with the company for about 7 years and have a lot of experience working with a lot of different MSOs and different state contracts and intimate knowledge of tracking and inventory management.
Perfect. Thank you so much for being here tonight. Next, I would like Faith to introduce herself and give us a background. Faith is also a colleague of mine from Daszkal Bolton.
Hi, good evening, everyone. It's nice to be able to meet with everyone via Zoom. I am the director of our state and local tax practice at Daszkal Bolton. I've been in the state and local tax industry since the early 90s, and I've been with Daszkal Bolton for probably close to 20 years now. I've seen a lot of changes both in the state and local tax industry in terms of income and sales and use taxation. I've also had involvement with quite a number of our clients that are involved in the cannabis industry. And so I continue to work with our clients, and we have some exciting things that are going on relative to Florida as well as on a multi-state basis. So thank you so much again for having me here.
Thank you, Faith. Next, I want the Harry Rosenfeld to introduce himself. He is the CFO for One Plant. Harry.
I'm the CFO of One Plant, and we're a public company in Canada called Bluma. And I'm dealing with all the cannabis issues from an accounting perspective.
Perfect, thank you. And I've known Harry for quite some time too. So he's an amazing person to know. And finally, Henry Martin, also another colleague from Daszkal Bolton.
Hi, my name is Henry. I work out of the Boca office. I'm a director in the audit and assurance practice for the firm. And one of my areas of specialty is the financial statement audit of cannabis companies as well as other growers that are not cannabis.
Perfect, thank you. So we have a lot of interesting topics to talk about tonight. So I kind of want to just jump right into it. Something that came out recently was the Treasury Inspector General of the Tax Administration issued a memo on March 30th in regards to the growing industry of cannabis. So I know, Rachel, we've had some conversation on this side. So would you like to discuss what does this memo mean for our clients or even the companies in the cannabis industry?
Sure. So this was basically a report that was done after sort of an investigation into the cannabis industry as far as compliance, and cannabis is obviously a cash intensive business. So they took a close look at the cannabis industry and determining what kind of the level of compliance, and made some recommendations to the IRS. The first recommendation they made to the IRS was essentially they noted that there's a lot of non-compliance. There's a lack of guidance in pertaining to 280E in the industry. And so they determined that they would like to, or they recommended that they would be starting a compliance initiative program in the cannabis industry. And I don't think this is the first one that they've undertook, basically meaning that they intend to audit the industry more. So that was one of the recommendations. They also discussed what they considered to be the unintended consequence of Section 471C, which was a change that happened in 2018, basically, which would allow, or they acknowledged that it would allow marijuana businesses to argue that they're entitled to use a method of accounting that includes all expenses in cost of goods sold to potentially avoid the impact of IRC 280E. And it can provide them with wide latitude in how to characterize their expenditures as cost of goods sold. So this has actually created quite a bit of buzz in the industry because obviously cannabis businesses want some relief from IRC Section 280E. And there's a lot of discussion amongst tax professionals such as yourselves as to how far cannabis business can reasonably take this. And I've seen a lot of different debate amongst tax professionals. So I'd be interested to know from my panelists what they think. Does this allow the cannabis businesses to sort of avoid completely the impact of 280E? Nobody?
Yeah, I mean, I think that's a good question. I think it's something we're definitely going to be seeing coming up in the future is definitely what are they going to be able to completely avoid it. But I mean, I don't think it's going to happen. I personally don't think so, but it's a matter of my own opinion. But I certainly think that this has created a lot of buzz, and I think that hopefully we see more guidance, because essentially that's what we really need is more guidance. I mean, that's what I'm saying, but I think that other people could also discuss more about what they think.
I think, oops, I just lost my notes. I think from a state and local tax standpoint, I think we're starting to see there's a lot of interpretation and a lot of guidance that's starting to come out amongst the states regarding how they're going to be interpreting 280. And I think that we're going to continue to see that evolve in the coming year. I think that state and local, I think the states have taken a big hit in the last 6 months revenue-wise. So I think it's going to be an interesting, to see how that shakes out at the state level. I don't know, Rachel, if you've had experience working on a multi-state basis and what your experience has been thus far based upon this case and the federal.
Yeah, no, I think that's a really interesting question. So Colorado actually has addressed this. In 2014, we actually changed the law so that the states don't have to follow the federal for marijuana businesses. So there's something called the marijuana business tax deduction that you can take on your state tax return in order to sort of get back all the disallowances that were made on the federal tax return. So, and I know that a number of other states have followed suit. It took us about 4 years to do it, but California is the same with Oregon, Washington State, I believe. So there's a number of states that have acknowledged that this doesn't seem fair to legalize cannabis and then to not allow businesses to take ordinary and necessary deductions, at least from the state perspective.
Yeah, well, Washington State has some pretty heavy-duty sales taxes in the state, so I guess you're maybe referring to on their business and occupation tax. But yeah, I guess they're trying to give some relief on one side where they're I think they might be, and Elizabeth, you and I discussed this, one of the heaviest tax states out there. I think
They are.
it's upwards of 42%, I think, in Washington state.
Correct. Yeah.
Yeah.
All in, you're at like 42 to 45%, depending on the jurisdiction.
Yeah. I mean, it's interesting for me because even in states that don't impose sales taxes on regular tangible goods and services, you're seeing like in Alaska or in Oregon impose a specific tax on either medical and or recreational cannabis. But I'm getting ahead of myself, Elizabeth.
Yeah, no, that exists. And I thought we were talking about whether the states would allow would not follow suit for 280E for federal tax filing purposes. So,
That's
so
fine.
there,
Yeah.
yeah, there's definitely significant taxes on cannabis, from excise tax to
Yeah.
special sales tax. And even in Colorado, you have a state special sales tax, and then a local jurisdiction can have an excise tax or a sales tax. And it's like that in a number of states.
But I guess what I guess maybe you've seen also is perhaps they're giving a little relief on the income tax side where they're not giving relief on the sales or excise tax side. And I guess the answer to that, and you probably would say, is because they can. And that's kind of, you know, the takeaway in what I've seen. And states have a lot of latitude. So they're going to push the envelope as much as they can where they can. So.
Right. I mean, there's definitely going to be a lot of, I mean, we definitely have seen a lot of patterns of discriminatory taxes for state purposes, but essentially, since we talked about some inventory, I kind of want to jump into inventory as well, since we have some panelists here, Mo and Henry and Harry, probably could jump in and discuss about the inventory side of it, since Harry is the CFO of one plant, which is Bluma, also in Canada. What are some systems that you guys have put into place in regards to tracking inventory to make sure that we're capitalizing all the inventory?
First, we use BioTrack, as you're well aware, which keeps track of our seed to sale system. So we're able to track every phase of the growing process. So from the time that clone is done all the way through the process, I know what stage it's in, how long it's been in there. And then we actually have to estimate yield to determine what our value is. And we have to do it both under IFRS and GAAP. So IFRS, I have to do biological assets and go through the whole process. I actually maintain two separate sets of books, one for GAAP and one for IFRS. And it's just very difficult. And, you know, you can be off because, you know, if I'm looking at my biological assets, I've got to estimate the average yield per gram per plant. And I can be off 20, 25%.
Yeah, coming up with that average cost, or that weighted average cost, is not easy. It's time consuming. Harry and I have felt that during the audits, and you know, really coming down to those three buckets when you're including it in your harvest cost, you've got your post-harvest cost, and then obviously you have your shipping and fulfilling. And the shipping and fulfilling tends to be the easier one of the three, but it's the first two as far as the, you know, harvesting, and then what you do after you harvested the crop. You're trimming, you're milling, you're drying it, you're taking it to the lab for testing, and all those things need to be allocated to those different buckets when you're coming up with that weighted average cost, which in Canada for an IFRS audit, that's actually a required disclosure in financial statements.
It occurs to me some of our audience may not know IFRS or GAAP, and so it might be good for one of you guys to explain.
So yeah, so on the GAAP side, that's just every country has their own set of rules of how to account for transactions. In the U.S., GAAP is generally accepted accounting principles, and IFRS is just it started up in Europe, and it's just the international framework reporting standards. So how you trade in Canada obviously doesn't follow U.S. GAAP for its public companies. They use IFRS. There's Canadian GAAP as well, but it tends to be more for the private companies.
I mean, even some little differences. If you're doing an acquisition, the goodwill gets booked at a parent level. They do not do push down accounting, as an example.
And then the big issue in inventory is the biological asset, which you kind of have to revalue to fair value every reporting period. And that's not something you do with GAAP. GAAP cost methodology versus IFRS, which allows you to bring it up to fair value.
Mel, do you have any input into some standard operating procedures and controls?
Yeah, I guess one thing that we see a lot is, as you guys kind of touched on, like states are imposing their own taxes, different jurisdictions come up with their own marijuana tax. Interpreting like what they actually mean, like which products are being taxed and how. And I guess if we want to use a simple example, like if we look at Illinois, when they went with adult use at the beginning of the year, they came out with different taxes based off of potency percentages for flower. So the lower potency had like a 10%, the higher one had like a 25%, and then concentrates, edibles, topicals were at like 20%. Plus your local, city, municipal, county, whatever else. Certain organizations didn't interpret those different tax categories properly, so they ended up either overpaying excise tax or underpaying excise tax. So one of the things that we like really try to drill into our customers is control who is building out the products and how they're being built out, and make sure compliance has a say in how things are being interpreted, especially when it comes to tax changes. Like I know Chicagoland just issued a new increase in taxes for any dispensaries like in the Chicago metro area starting July 1st. So that's where honestly a lot of these guys came back to us and they're like, hey, we ran these reports and the state's telling us we owe less money than what we told them we owed. And that came down to organizations like not having the right person creating products. They mislabeled or misunderstood those inventory type taxes, and frankly, they ended up in the red over it.
Mm-hmm. Right, and I think that's probably a really good question to probably Harry could also ask. There's a lot of issues while you're setting up your, because what essentially just is pretty much a new company, probably set up in 2016 is when they got their license. So what are some issues that you have occurred with making sure that there's proper procedures and tracking inventory and, making sure that everything is being compliant?
A couple things that we do be very careful is obviously once a month I actually look at inventory, but I also roll the inventory. So I know what my sales are, I know what we grew, I know the change, and I actually reconcile on a monthly basis to make sure that I can account for every product. If something's destroyed, I keep track of that. So I know where all our inventory is because it's, it's like gold. I mean, you have to keep track of it. So we're very, very conscious about, if you're going to take a derivative product and make this is what goes in. It takes X number of grams to make this many grams of rosin. So we know all that. We have conversion tables, and I actually make sure that we are fully compliant. Mm-hmm. And it takes a lot of work. Usually takes me 8 to 10 hours every 2 weeks to do this.
Right, and so I know it's a lot of work also in regards to making sure that you're capitalizing and capturing all the inventory and the cost of goods sold. Maybe this is also, I think, another question for Rachel really is, what are some other items that we could really capture and make sure that we're capturing all the inventory and costs into the cost of goods sold? And what are some systems that, you probably could advise?
Yeah, I mean, that is the $100 million question, right? I mean, this is what is up for debate with numerous IRS examiners as to what can you put into cost of goods sold. And unfortunately, we don't really have good case law or guidance from the IRS, which is something that the TIGTA report acknowledges when it comes to what you can put in a cost of goods sold under Section 471, be you a reseller or a producer. They don't get, none of our cases that have been litigated in tax court, many of them should not have been litigated because they had bad outcomes. But there hasn't been the real nitty gritty detail about what kind of expenses are allowable. And I will tell you from my experience with examinations, I think the regulations are pretty clear, but there is let me just say that IRS examiners take wildly different approaches to what they're going to disallow in an examination from somebody's cost of goods sold or not allow you to put into cost of goods sold. So I think there's inconsistencies across the board, probably some, just there might not be very, consistent training. I think the IRS's position has changed on throughout the years for the 10 years that I've been doing this on different, in different ways. So, I mean, generally, for a producer, you're going to want to create some kind of nexus to the production. So your direct and indirect costs of production. For
So,
resellers, it's cost of products less trade and other discounts, transportation costs, plus ordinary costs to acquire the goods. Now that's a big question mark. And there's a lot of arguments that can be made. But the IRS's position generally is that if you're a reseller, you're going to get what you paid for the product as well as your transportation costs. Now, I think procurement costs could be in there. There's a lot of other things that I think are necessary to acquire the goods. But this is why the way you set up your chart of accounts, your books, as a cannabis business is so very, very vital and important because you could be missing things. You could be taking positions which the IRS is not happy with. So, you know, I just think that that's the real question. And I've seen, you know, numerous different approaches taken by CPAs as to what they think is an allowable cost of goods sold. So, you know.
Some are more aggressive than others.
That's true. That's absolutely true. And frankly, you know, I think as a cannabis business owner, you have to determine, do I want to concede the issue now, or should I, if I can create this nexus and sort of put it into cost of goods sold, should I take it? And then, you know, it's a risk analysis, really.
So what's your risk appetite for
right, exactly.
getting audited? How much pain you can go through in an audit?
That's exactly right. And sort of that's the counseling that people get too.
It's like the luck of the draw on the audit also for the IRS auditor, since like many state auditors, they can take vastly different positions, it sounds like, from what you're saying, from one to another.
That's true. I mean, there's just tremendous inconsistency. You know, sometimes they disallow packaging, sometimes they allow it. Sometimes they allow all your legal fees. Sometimes they disallow all of them. Sometimes they allow 50%. I mean, it's not consistent, but the taxpayer has to pick a methodology, right? They have to work with CPAs such as yourselves and sort of pick a strategy to go forward. And I think for IRC Section 471, that consistency is really key year to year. So.
Wow.
My dogs are much louder.
I have the two loud ones inside, but I guess that's just, you know, it depends on how risk averse you are, even on this, you know, when we deal with state and local tax audits. And I think it's for any issue, you know, I think for the IRS or for state audits, regardless of the issue, you see a lot of inconsistency, or I see a lot of inconsistency from auditor to auditor at the state level. So in the cannabis industry, yeah, I have not worked in detail on a state audit at the cannabis level, but I could see it in other areas. And from what you're saying for the IRS, it sounds like it depends how risk averse someone wants to be, number one, and number two, you know, how well you determine what your exposure is if you're audited. So, you know, you have to be willing to understand what that number is.
I have a question too, though. How do you handle in certain states where, let's assume you sell both cannabis in the store, but you also sell merchandise and, you know, water and other things? Are you guys apportioning the rent, because that's not for the sale of cannabis? Are you apportioning the rent by square foot or some other methodology?
I can tell you what the IRS says about that kind of allocation method. So it is true. I mean, there was a case called California's Helping to Alleviate Medical Problems, where the court kind of found there was a separate line of trade of business that wasn't trafficking, and therefore you could allocate your expenses. Now, I'm not saying that that method is something that you shouldn't do, but the IRS looks at it. What I would say is it has to be real and recognizable, because if you are allocating, you know, 50% of your expenses because you sell, you know, $10 million worth of marijuana, but $100,000 worth of t-shirts, the IRS is going to say this is enhancing the sale of cannabis. And there's actually a case kind of out there that kind of mentions that what is your real trade or business? And so you know, I think that it's a method that could be undertaken, but you have to be very careful. And I think at best, you'll see the IRS would probably allow a proportional income allocation. And so that's why a separate trader, you know, the I'm not trafficking, I sell bongs and pipes. It won't work with that one. T-shirts doesn't necessarily work with that one in an audit either. But if you were to really sell or have real, I mean, where I think you could potentially offset the burden of 280E, and this is just my theory, is with the sale of like hemp products. If you had real recognizable income with the sale of a non-Schedule I controlled substance, I think there's validity to that argument. But if it's just bongs, pipes, T-shirts with your brand name on it, I don't think the IRS buys it. And it could be in an audit, they could basically say, we still think you're a trafficker. This is just enhancing the sale of your cannabis. You're not really in a separate line or trade or business, that kind of thing. So
do you also not get deductions for the part of the business that's educational? At least I thought we did. So, you know, the people at the store who are selling, but also we have an education room. We were told we could do that.
yeah, I mean, I'm not giving legal advice, but all I can do is tell you from a experiential standpoint that argument does not win in an exam.
Okay.
You know what I have seen in Connecticut? They're a very pharmacy-centric types system.
That's a difference. Yep.
Yeah, so what they like almost have like a separation where they do the consultative approach. They charge a fee for the consultation, but then they allocate that revenue, but they're charging like $100 a fee. So it is what you're saying, real and recognizable, and they've done things to mitigate it so that if they are inspected, it's like, yeah, look, there's clearly a physical separation here on how we're running this.
And I think that's where this is what a lot of states don't recognize is the regulatory environment from which you create for cannabis businesses can really have a tremendous tax impact on cannabis businesses. Connecticut is a perfect example. In Colorado, basically, cannabis businesses, recreational cannabis businesses were not allowed to sell a non-marijuana consumable product. So they couldn't sell water, sodas, that kind of thing. So really the IRS comes in and says, well, you're a trafficker because they're not really selling anything other than maybe some bongs, pipes, and T-shirts. And it just, unfortunately, it just doesn't work. Now, I do think there's ways that you could potentially allocate based on storage, inventory. If you have product procurement in a particular area, you have labor that's associated with product procurement in the dispensary. I think there are arguments to be made on allocations on the dispensary side, but that one in particular, having seen it many times, I can tell you that the IRS is not going to, they're probably going to say no. That doesn't mean they'll win if you challenge them on it. I'm just saying that in the examination stage, remember their goal, the examiners, is to protect the government's interest. So if they think they have a case, they're not, you know, they're not going to agree necessarily.
Right. So, I mean, that's a huge issue too. I mean, and especially, you know, when you're preparing, when you're doing your taxes and you're making sure that the clients are being compliant. And so those are kind of those main topics of how can we prepare if in the case that we get audited, because we have enough documentation to support us. Can we argue where is there enough cases for us to support our position? So, I mean, it's definitely a huge thing.
Unfortunately, some of the cases that have been litigated, it's just, it's kind of a shame that they weren't settled out before they went to court, because we've had very detrimental tax court opinions for the cannabis industry. One that is of particular interest is a case called alternative healthcare. Alternative healthcare, they found that a non-licensed management company that was, providing management services to a nonprofit cannabis cooperative in California was also subject to 280E. Now, I think the facts might be a little that the facts were, based on my reading of the opinion, that the management company was sort of, they were like commingling the two businesses, maybe utilizing the management company to make payments, for example, of cannabis. So, and because the management company had a bank account. But this is such a tax inefficiency, this outcome of this case. You have the underlying cannabis business, which is a nonprofit under state law, but has to be a for-profit federally, right? Because they don't allow cannabis businesses to be nonprofit at the federal level, that it has all their expenses disallowed under audit. And then the management company, which is commonly owned, is also found to be subject to 280E, and therefore all those expenses get disallowed under 280E as well. So you end up having a taxable event in two commonly owned companies that are basically moving money from one pocket to another. That is a terrible outcome. And unfortunately, the IRS is taking this case and the outcome of this case and taking that theory and now trying to find that affiliated separate entity cannabis, non-cannabis licensed businesses like management companies, and we've seen in the case of a landlord company, are now in examination. Their position they're taking is to say that those companies are also subject to 280E because it's a unified business purpose with a single profit motive. Now, do I think they're taking it too far? Absolutely. Do I know that if this was challenged in certain circumstances, depending on the facts and circumstances of a case, they would win on those arguments? Maybe not. But again, in examination, they're protecting the government's interests. So you have to be really, really, really careful about how you structure your cannabis business and making sure that if you do have other entities, other subcos under your holdco, if they're engaged in the business, other types of businesses, for example, like equipment leasing, intellectual property licensing, those kind of things, that you're making sure that there's arm's length transactions, that they're commercially reasonable, that all the books are being kept perfectly, that you have, I mean, you have to, and unfortunately, a lot of people in cannabis just say, oh, we'll just set up a management company and that's how we'll kind of own the economics of our underlying nonprofit. It can be problematic. You have to think very, very carefully about how this is done.
Right. No, that's definitely a huge issue. It's just making sure that the structure of the company, and every company is different. Every company is set up differently. Every situation is differently, which kind of brings into another huge issue too. A lot of our clients end up being investors in these companies. So I definitely think that this is a huge question for maybe Faith and Rachel also. Again, what are some items that you would definitely want to look out for when you're investing in the cannabis industry as an investor, especially when you're doing your due diligence?
I mean, from a state and local standpoint, and historically, due diligence, federal taxation issues were the focus historically. And I think there's been a lot of changes with regard to sales tax, particularly now with recreational cannabis, medical cannabis, the excise taxes, sales taxes, and there's no one size, I guess the point I'm making, there's no one size fits all for state and local taxes. So I think my advice for investors in the cannabis industry and any industry is you have to be very mindful of state and local excise taxes and sales taxes that crop up on these transactions. You know, companies that are non-compliant with taxes, I believe a while back a California company was shut down because they weren't in compliance with cannabis taxes. And I think as an investor, it's really important to get a clear understanding of the history of the company, to understand what they're doing relative to compliance. Are they filing excise taxes properly? Are they, if they have to, you know, deal with a cultivation tax or a wholesaler tax, are they collecting and remitting sales taxes? One of the issues, believe it or not, that I see come up on due diligence is companies that are collecting but not properly remitting sales taxes, which is a big no-no. And when you buy a company, when you invest, if you're investing in the company, these are all important issues to consider. Even if you're purchasing, and just say we were to purchase the assets of a company, the liabilities for sales taxes do follow the assets. So I think those are really important issues. And sales taxes can be quite significant. you know, even though companies are limited by state, so they're typically doing business in one state, I think that the sales taxes and excise taxes are material. I think, as we talked about in the beginning, a state like Washington, the taxes are upwards of 40 some odd %. I think even in lower tax rate states for sales taxes, you see the sales taxes are higher on cannabis than they would be on other industries. And so as an investor, I think from a state standpoint, you really have to really dig deep into what is being done relative to state and local excise and sales taxes and any other taxes that might be imposed, but particularly those.
The one thing I'd add is also to do some amount of due diligence on how the company has actually addressed 280E historically. Yes. Because you can kind of determine your level of exposure as an investor if you take a look at those tax returns and try to understand their approach. And I do that a lot. For business, I mean, look, most of the time we try to avoid that exposure by doing some kind of asset purchase, but you are absolutely correct, Faith, by saying that you've got to make sure that they are paying their sales taxes, because those sales taxes can potentially, or trust fund taxes can follow those assets when it comes to state collection of those taxes.
Right, not so unlike withholding or state on, not so unlike withholding taxes. So yeah, agreed. Right. But good point on 280E, echoing that clearly.
Yeah, so what I do in a lot of types of acquisitions is take a look at those historical tax returns to try to determine whether there is tax exposure out there from a 280E perspective. And bear in mind, this is where the state regulatory environment really can make a difference as well from a tax perspective, because in certain states, you have to acquire the business that owns the license rather than being able to do an asset purchase, which would get you out from some of those liabilities. Yes. And so it's just so important. I mean, I've seen this happen over and over again in California, where you just have, remember in California, we had 10 years of a sort of quasi-legal nonprofit type of way that businesses were operating in the cannabis space. And then all of a sudden, a couple of years ago, the state stepped in and said, started to regulate. And so you have a tremendous variety of how CPAs have dealt with 280E over the years or the history of the business. And there can be a lot of exposure there, a lot.
And from an excise and sales tax standpoint, even looking at cultivating taxes, that California's taxes are not insignificant, regardless if it's a cannabis or non-cannabis industry. And California, my experience on audits, California is fairly aggressive when it comes to auditing companies at any level. Income tax, as I'm sure you've seen, sales and excise taxes. And like I said, even looking at some of your lesser exposure, lesser tax states, the tax rates can still be substantial. So I think, Elizabeth, going back to your original question, just to sort of close the loop, I think the takeaway is it's really important to get with your CPA and make sure on due diligence as a buyer that you're really honing in on some of these issues that Rachel pointed out in the 280E, as well as looking at the sales and excise tax issues. As easy as asking for copies of returns just to make sure they're even filing something, because that's step one is making sure they're even doing something to get it right. Step two is then trying to determine, are they doing, what they're filing, is it being done correctly? And step three is to keep in mind, if you're filing, and this is actually really important, if you're filing tax returns, the statute of limitations for most state purposes is going to be 3 or 4 years. If you've never filed a return, which hopefully is not the case, the statute of limitations is never going to start to run. So that becomes an issue. So we like to think that we're looking at a 3-year look back for exposure, generally 3 or 4 years, but that's also just something to keep in mind.
I wanted to just add too, when it comes to employment taxes, taking a look, what we've seen in a lot of cases too is that people have been for example, paying their employees as independent contractors. And, you know, bear in mind, the IRS can come in and do an examination for what's called backup withholding. And so there are just so many issues that you have to look into to ensure that your business that you're acquiring has been tax compliant. Because especially if you're buying into the business, some of these liabilities can definitely follow you, and can be significant issues. Now, that doesn't mean that they're going to be able to personally go after you. So a lot of people maybe haven't heard of the trust fund recovery penalty for employment taxes. They can, you know, essentially the IRS can pierce the corporate veil and go after the willful and responsible party individually for for failing to remit employment taxes. And we unfortunately see some of that a lot in the industry, especially in kind of where it's been sort of quasi-legal for a while. And maybe not everybody's been on anybody's radar. So.
Right.
Elizabeth, one thing I wanted, what Elizabeth actually did for our company when we first started, is they actually did a full 280E study for us. She went to our stores, our growing facility. She looked at everything that we did and wrote a position paper for us, so we knew exactly what we do and even how to structure our general ledger. So anybody who's going to do that, I recommend. I mean, Daszkal did a great job of that, which made my whole life easier setting up the GL.
And Elizabeth, you're the one who's going to do it all.
It's not a problem. That's why I got some coffee here. But anyways, I kind of wanted to also touch upon also a really big scandalous issue also is the fact that we have a lack of banking. And so I know that during an audit, I've talked to Henry about this a couple of times. I know that some of our clients are lucky to have, or blessed, probably I would like to say, to have banking, or to be able to get banking. But I know that there's a lot of issues with the banking issues. And while we prepare tax returns, we always like to reference to a cash balance to make sure that they have a bank account that reconciles. But Henry, do you have any suggestions when you're doing testing, when you're doing an audit, of making sure that the clients are tracking cash and if they have a lack of a bank account?
I haven't had a client that didn't have a bank account, so I haven't seen that issue. Obviously, you know, just reconciling your cash accounts at the end of each month. A lot of these organizations tend to have heavier amounts of petty cash. So, you know, I know that's something that Harry has to deal with, and just having the proper controls in place to oversee that petty cash, and, you know, getting receipts for every transaction, and really whether you're doing it daily or weekly is having a process in place and having somebody overseeing that, and you know, who they're giving the petty cash access to, and just limiting how much each individual can take out on petty cash. You know, you never want to have too large of amount out there, because, you know, besides leading to some kind of fraud, obviously, you know, there are, you know, robberies and so forth in this industry, because, you know, it's a very highly valued asset that can be easily sold. So, you know, there's always that protection to it as well.
The other issue in banking is you can't get credit cards. So if, like, we do statewide delivery, we have to use debit cards for all our gas.
Right.
And so every driver gets a card. They have a certain amount of limit today, which is not a lot, but they have to fill up with a debit card. So, and that's what I reconcile every morning, every debit card, to make sure there's no unusual transactions. Where with a credit card, I wouldn't worry about it.
And that requires manpower. So it's an additional cost that you have to have, because you have to have somebody, you know, reconciling and doing it every day, but then you have to have somebody come behind and review that. So.
Absolutely. So, I mean, it's definitely it's a blessing to be in this industry, but it's also a curse when you're having the issues of a bank account being canceled. I've had several clients in different states where, if they're not being compliant, if they're transferring cash to and from different companies, the banks will start triggering a red flag saying that they're being, that, you know, they could be considered money laundering or something like that. So I know there's definitely a lot of issues with just maintaining a bank account. And if you have one, that's great. Just make sure you're being compliant. But essentially, it's very difficult to maintain a bank account or even get one.
Now, is there an issue in any state, I mean, for federal government? Because A lot of my other clients I've dealt with, I took more than $10,000 in cash from one person in 12-month period. I had to report it.
Right.
It didn't matter if it was individual transactions or something like that. Have you seen the IRS and some?
Yes.
In Florida, it's hard to spend $10,000 in a year.
I have done 8,300 audits. That's the form that's supposed to be filed for any
Right.
cash transaction
Mhm.
that is over $10,000 or a series of related transactions over $10,000. So this is a great point, Harry, that you bring up. Because marijuana businesses are so cash intensive, and bear in mind, like a lot of people don't want to buy cannabis with cash. So they're always, even if they do have a bank account, they're going to be cash intensive. And, wholesalers especially are dealing with a lot of potential transactions that are over $10,000 in cash. And so I've actually taught classes to employees of cannabis cultivations to teach them how to gather the right information so that they can be compliant in filing their 8,300 forms, because the IRS a few years ago went into Colorado and audited a whole bunch of businesses for 8,300 compliance. And this can be a significant amount of penalty that you can be responsible for if you are not 8,300 compliant. And so the type of information that you want to gather is going to be the driver's license of the person that gave you the cash, the name, their address. And then if you have, for example, somebody conducting a transaction on behalf of a business, you're going to have to get the business information, including the EIN, the address, and everything for the business that they are taking the cash on behalf of. And all of this has to be filed and reported to the IRS. And if you fail to do so, there can be significant penalties as a result. So I always talk to cannabis businesses that are dealing in cash about whether or not they're 8,300 compliant and they're gathering the right information, because let me tell you, it's really hard to go back at the end of the year and try to recreate that information. You need to get the information right there and then when you're doing the transaction, when you receive the cash from whoever you receive it for. You need to gather that information at that time. And then I can't remember how soon you have to file the form, but I think it's within a series of days that you actually have to file the form. So trust me on this, it's not fun being audited for that type of compliance. It's very, very essential that your employees are trained on how to comply. You also have to, by the way, give a notification statement, and you can be to the individuals that you have filed an 8,300 with their information. And therefore, if you fail to give that notification properly too, you can face another fine for failing to provide a notification statement by January 31st for the previous year's transactions. So cannabis businesses, unfortunately, tons of compliance and issues surrounding tax matters beyond the regulations that they have to deal with, in just everyday compliance. It's just incredible how much work it takes. And so,
it's very costly as well, because all this compliance work, I mean, it takes a lot. It takes an army to make sure that the other companies are being compliant. So, I mean, if you really want to be in the industry, it's not even the fact that you think that you can make fast money. It's the fact that, can you keep up? Can you make sure that you're being compliant and making sure that, and also integrity as well. You got to make sure you have integrity to be in this industry, because it's not just for the average Joe who thinks that they could just set up a business and keep it running. It's the fact that you have to have a strong foundation, make sure that you have a strong, accountants, attorneys to back you up in case you ever get in trouble, and make sure that you have, insurance, really. I mean, worthy insurance. So,
yeah, I always say ounce of prevention, pound of cure, right? A lot of people think lawyers are expensive, accountants are expensive, but let me tell you, if you do the work up front and you do it right, you don't have to go back and fix it, which is always, always more expensive. So it's so essential that you have a good team going into the cannabis business. And that includes components such as CPAs, people that have really good inventory tracking software like BioTrack, good attorneys that can understand and give you guidance on sort of what you can put into cost of goods sold reasonably and what you can't, et cetera.
And hopefully helping to set it up properly from the onset. So from, federal taxation for state and local, and this is in cannabis, but also across, any industry, setting it up properly from the onset is just super important. Because if you get it right out of the gate, you'll find you have less issues, and you'll also, find when the auditor comes knocking, whether it's an IRS auditor or a state auditor, in some of these states, you'll feel more comfortable going into it. And if you have a good tax advisor, attorneys helping you, they're the ones that'll ultimately help you, in representing you on the audit. Echoed by my dog in the background. Apologies.
Anyways, Mel, do you have any other comments that you want to make in regards to, the making sure that everything is being set up correctly? I know it definitely manifests itself financially. So do you have any inputs in regards to that?
I mean, honestly, in line with everything you guys have talked about from like the accounting tax perspective about setting things up, like we recommend the same things, like spend the time up front load, understand what you're doing. Like, all these things are tools. Like Harry touched on something like about the forecasting of yield. Like he said that, and I'm like, we actually have a tool for that can show you your expected yield output. And the more harvest you feed into it, the more accurate it becomes. So, just like really, it's same in line with what you guys are talking about. Like we tell them front load, spend the time, build it out. And Harry's obviously like on top of it because he's able to reconcile all his inventory and his biologicals on a regular. That's really the biggest thing. And make sure that there is SOPs and there's documentation. And if you do have turnover, there is a knowledge base that the new people can look at to understand this is how we should be doing it. One thing that we see a lot is over time, especially over years, people get fired, things happen, you change your process, and then 3 years down the line, you're looking at reports or data, and you're like, why does this look like this? And it's, it's like the telephone game. They kind of remembered stuff from the first guy and the second guy, and, you're 10 people down the line now, and it doesn't look like the way it started.
Absolutely. That's a huge thing too, is making sure that the person behind the next person, if in the case that someone's out, that they could pick up from where you left off, and make sure that the knowledge is being carried throughout the company, not just one person. I think there's a lot of, everyone has a little bit of an ego or want to be a control factor. So it definitely is education based, being in this industry, making sure everyone's educated across the board, not just one person. And I think we're coming up on the hour. I'm not sure if we have any Q&As from our audience. Amanda, do we have any questions?
Hi, welcome back. It doesn't look like it. Everybody, we have enabled the chat feature at the bottom toolbar. So if you do have a chat, please let us know. Either say, I have a question, or put your question right into the chat, and I'm happy to call on you or unmute your mic so you can participate.
Okay.
I wanted to just mention one other thing while we don't have any questions, which I think is really important. I get a lot of questions, as I'm sure you guys have as well, about Section 471C, and can it really be impactful in helping to sort of lessen the burden of 280E? I think the answer is probably yes, but remember, you may have to file a change of accounting method, which is a Form 3115, and you have to do that with a timely filed return. So that is something that everybody in the cannabis industry, if they're wanting more information on it, they should talk to their accountant or their lawyer or whoever. Because if you don't do it right, they can say no. Or if you do it late, they can say no. So just bear that in mind. It's an automatic approval if you file the form with a timely filed tax return, but bear in mind that isn't a approval of your method. It's just an approval that you have a change. So just something to bear in mind, because a lot of people have been asking questions about that.
Right, and I've heard a lot of people ask me a lot of questions too regarding, should we amend the 2018 return? Maybe you could answer this, Rachel. Should we amend it, or should we move it forward, making it for 2019 or effective 2020? What's your recommendation?
That's a hard question. I think it depends on the business. It depends on what the economic impact is. Look, I mean, if you did it wrong, you should amend your return. That's for sure. If you, for example, didn't comply correctly with 280E, it's probably advisable to amend.
Right.
So, but, you know, for the purposes of taking advantage of 471C, assume there's actually been a recent case on this called Richmond's Patients Group, which everybody should give a read, because basically what they tried to do was change their accounting method during an audit, and the tax court said, oh no, you can't do that, and no, you can't put all these things into cost of goods sold. So it's something that I think needs to be looked at on a case-by-case basis, and it depends on the facts and circumstances.
Right. Correct. So Amanda, do you have any questions or? No? Oh, you're on mute, Amanda.
Thank you. It doesn't look like it.
I think I see a
Oh.
couple. I think I see a
We just
couple
had one come in.
There's
It was
two,
from
actually.
Eric.
Yeah.
Oh, perfect. Perfect. Jeremy, I will unmute you. Jeremy, did you want to ask your question? Would you like to ask us to ask it for you?
Yes. Can you hear me?
Yes.
Yeah, I was just curious what your guys' experience is for the insurance market in the cannabis business. Have you found that your clients have adequate access, or you guys, the CEOs, personally adequate access to like workers' comp insurance, general liability, and some like umbrella policies for your businesses? Or are you finding insurers less likely to, provide you competitive rates because of the business?
I'm finding the rates are higher, but I'm able to get insurance. Also, certain brokers will deal with you and certain won't. Like Marsh and Aon are not going to deal with a cannabis company. So we have, there's some great local brokers here, like Cartham Insurance down here, who takes care of us very, very well. And the rates are a little bit higher, but we got insurance. You can get D&O insurance. We can get them all, even health insurance, but it's a little more money.
It's a premium for that type of insurance in the cannabis industry.
Okay. Do you guys have an average premium? You see it's 5, 10, 15% higher than?
It really depends on what you're talking about, but it can be 5, 10, 15, to be more on health insurance. It's just a matter of your workforce and how many people sign up. A lot of other thing is in this industry, you have a lot of lower paying people who aren't going to get the benefits. So you may have a large workforce, but you only have a small level of participation. And that also affects the rates. It's kind of like the restaurant industry.
Understood. Yep.
I think we have a question from Eric as well.
Yeah, what I was just thinking about is I actually have a colleague who lives up in Michigan outside of Detroit.
Okay.
And it occurred to me that I don't even know exactly what Michigan's status is with respect to cannabis and how it's sold or grown in that state. So I was thinking, is there any sort of reciprocity? I mean, we do all live under the Commerce Clause, don't we? And if we're going to move the ball forward, I would imagine we would have to analyze it from that point of view. And so I wonder if anyone here has any insight.
Very interesting
Sure.
question.
Yeah.
I don't know if somebody.
Can I just, can I jump in? I'll take this. So in terms of what they're currently set up, they're doing med and rec. They have a pretty liberal way of accepting kind of patients into the local state system, but from a reciprocity perspective, if you're buying adult use or recreational, you can just flash your ID and buy what you want. In terms of reciprocity, there's a handful of states that actually do true reciprocity. Like we just launched in New Mexico, allowing patients from other states to like register online. You can scan your ID off your phone. Nevada kind of does that, but when a state goes recreational, reciprocity kind of becomes more of a moot point.
Yeah, so you can, as a medical patient, there are certain states that will accept medical cards from other states so that you can purchase medical cannabis as a patient, a medical patient from another state. Many states do not allow that kind of reciprocity. So like Colorado, for example, does not take medical cards from other states, but we have recreational cannabis. So Mo's exactly right. You can just flash your ID and buy some cannabis in states with adult use.
I mean, I appreciate that sort of micro analysis of this, but trying to think of it from a more macro point of view, right? As far as the business and what you were discussing, that I admittedly arrived rather tardy, inadvertently. You were discussing issues about audits and what have you. At a more macro level, right? What sort of reciprocity exists amongst the states? I mean,
You mentioned in your question, which, like, are you talking about whether states can do business with each other when it comes to
well, like
cannabis?
in other words, the difficulty in obtaining a license in any state in this country right now is pretty obvious based on simple news you can read. So as far as, you know, your ability to get a license fast-tracked in Florida, if you already have one in Michigan, for growing purposes or distribution purposes, stuff of that nature. My question is more general, given the lack of
So
Go ahead.
public info on the information.
yeah, no. So I mean, this is an interesting segue into how states can get it very, very wrong from a regulatory perspective, right? Where they don't allow access to cannabis business licenses to small businesses, mom and pops, this type of thing. I'm sorry, Florida, but Florida is one of those states where essentially the state gave out a handful of licenses in a competitive licensing system and essentially created a whole bunch of monopolies for the winners. And that is very different than a state like Colorado or California or Oregon, which has more of a free market system. So as long as you can get a state and local license, as long as you can apply for that license, meaning the local jurisdiction allows you to apply, anybody can get a license. The state doesn't limit it. I mean, you have to be qualified over 21 and not have certain felonies, but you know, there's much more opportunities in those states for people to obtain licensing. And we literally have thousands of licenses. I think the state with the most licenses per capita is Oklahoma, of all states.
Yeah.
So yes, it's, I mean, this is where I'm sorry, but I am not a fan of competitive licensing. And I wish states would not follow that model, because it leaves so many people behind as far as opportunities to get into the cannabis industry. It's almost pay to play. Like you create them, you know, the state comes in and says, we're only going to allow X number of licenses in X jurisdictions, and you're going to have to compete for them. And then they have this sort of arbitrary judging system, and the state always ends up getting sued by the second place people who lost by 0.00 of a point. It's just a really bad way to do it. And I hope that Florida, when you guys have recreational, and which I imagine will happen anytime now, that you think twice about that, because the state of Florida has been being sued for years over this. Same with Maryland, same with other states. It's just a bad way to do it. And look, we're America. What's wrong with free market competition? What's wrong with that? Yeah, I mean, I don't understand why we have to, you know,
So the answer
is monopolies.
Not to interrupt you, but the answer then, I would imagine, is in Tallahassee. And if you can change Tallahassee, you might be able to change that whole competitive licensing thing. That's a phrase I'd never heard of, competitive license. Right.
Yeah, it's where they say we're going to award 10 licenses and hundreds of people compete for them, or businesses compete for them. And it's just completely arbitrary. And it doesn't make any sense.
Sorry, not to
now that
shift
I'm off my soapbox.
I'm sure Harry doesn't like to hear that over at one plant with one of our lovely licenses. We have one more question from Jessica. Jessica, I unmuted you. Would you like to ask your question to the panelists? And we'll probably conclude after this.
Yeah, no questions here. Really more, yes, open licensing is certainly the way to go. I hope Florida does look at that when they look at adult use, just so that there's more opportunity for everybody to play in this space.
Great. Yeah, by the way, Colorado just passed social equity, allowing for incubator licenses. So there's still changes being made. So I think we have a really good question here. Given the Farm Bill and the legalization of hemp, how does IRS treat hemp businesses in regard to IRC 280E? Well, guess what? It's no longer a Schedule 1 controlled substance. So 280E does not apply to products or businesses that sell products that are derived from industrial hemp grown in accordance with the USDA program. So good news.
Have you guys seen any or had any clients or corporations that start in the hemp business and then convert later to a marijuana business?
That's an interesting question. Yes, and maybe the other way around too. We've seen cannabis businesses that have said, this is too hard, I don't want to be regulated like this, and go the other way and go into the hemp. So yes, and
more specifically, given the state of what you talked about in Florida and how hemp is now legal and soon one.
Oh, he went muted.
we lost you.
Sorry.
There we go.
Specifically, starting in the state of Florida, as of right, like you said, right now there's only 20 companies that are allowed to sell marijuana, and one day, hopefully soon, it'll be legalized either through state action or federal action. And so I would assume many companies that were in the hemp side of the business, which is now legal, would want to or tend to convert to a THC side of the business once it goes recreation and guidance is provided by the state, et cetera. I was just curious if you guys have had any experience with that in the past.
Yeah, I mean, I think it depends on the regulatory environment. I mean, because just because you have a hemp license doesn't, even if the state legalizes, it doesn't necessarily mean that they're going to allow you as a hemp business to apply for that license.
Yeah. Right, correct.
So it's, I don't know.
I was thinking more in regards to taxation, because if you have a hemp business, all your, you can write off your ordinary cost of doing business, all your startup costs, build-up costs, et cetera, et cetera. And then once, if you have the opportunity, then you can convert your business.
That's a really good point. That's a great point. Yeah.
Thank you. Thank you.
Smart people out there.
I've actually seen a lot of companies who start up in hemp, and they make more money than they do in a company who does just solely cannabis, because it's just more money.
Easier, there's less headache, there's less compliance, there's less oversight. It's less of every single thing you can think of.
Right. Right.
Except moving it across state lines.
If you're going to be in this industry, you got to be ready to, there's going to be a lot of huge losses the first couple of years until you start making money or seeing a return. So essentially, I guess, Amanda, we're coming up on our time, right?
We are. Thank you all for participating, panelists. You guys were great. I took a boatload of notes. I'm going to pull up a bunch of cases that Rachel told us about that I'm very excited to read. So thank you very much for your time. We really appreciate it. Another announcement for everybody. We actually will kind of continue this thought. You guys had talked a little bit about insurance tonight. We are having a separate insurance panel on July 30th in about a week. So for all of our attendees, if you guys want to participate, please feel free to look out and join us next Thursday on July 30th. But other than that, thank you so much for your time, everybody. I hope everyone has a great night.
Thank you.
Bye.
Thank you, guys.
Bye, everybody.
Bye-bye.